Hi, and welcome to another video for the PA Corner with Gigi of theboringtrader.com. Today is the 18th of March, and we go back to DAX for some excellent examples of how I use the battle plan. This is the situation before London Open. After Powell testimony yesterday, the market shot up, respected yesterday R2, and never really retraced, and it stopped around this R2 level here. And actually, after at the beginning, at the opening of the overnight session, we have a gap, and it opened up again. So we are in new territory here. We've never been so high. And we know that the bears are in retreat and the bulls are in pursuit. So we need to identify places where the bears organize their defenses. We may expect something here at R1. As you can see, the R1 has not really been respected very much, and the bulls were still in control. And the bears stopped here. That, as far as I can tell, it's in the middle of nowhere. I'm sure that someone somewhere has found that this is an important fib level or a Gann projection or an Elliott wave or whatever. Anyway, as far as we are concerned, the markets had this top here and retraced. R1 again wasn't that important. The moving average wasn't that important. R1 became important here. So we had to take note of that. And at Frankfurt Open, the market went down, which usually does it because quite a lot of people missed this move, so they want to push the market down and go back on the bandwagon and go up, possibly. And at the moment, just before London Open, we are at this level here, where you can appreciate how this area that we traced based on last night is holding, and there's a pretty big wick here. So we are expecting the opening with a lot of volume, and this is the opening. I hope you can see how there is another, so I'm just moving this, another big wick here. So these two big wicks are a sign that this is the area where the bulls want to defend their gains. Another interesting point is that the bulls tried to push the market up, and they were stopped at the moving average and pushed back down. This is quite typical moves of London Open. The first 2 or 3 bars of 5 minutes, they're quite chaotic. Today, in particular, at 8 o'clock, Lagarde was speaking, and so it was a good idea not to do absolutely anything, but just observe what the market was doing. Okay, a new attempt to test the moving average. And then there was this big rally here. Probably was something that Lagarde said, or I don't know. In terms of price action, if Lagarde wasn't speaking, we could have actually got in at this level here, because when you see something like this, you see that the bulls are quite serious here. The bears should be quite serious here. And if they manage to push the bulls back all this way, they should try again this level here, and they didn't. That means that they're not strong enough, and the bulls tried again to test the moving average. So if at some point they manage to break this moving average and break out from it, it might be pretty much of a momentous experience for the bulls, and they could go up. The only problem with that is that there is quite a lot of space between the entry and this, and there is an R1 here that was support and then resistance point. In this particular instance, the market went up. Let's see if this level that we have identified overnight can hold. Once again, it holds. The bears are pushing the market down. They can't manage to do anything better than R1, and now the bulls are back here. Now, on the back of this momentum, again, considering that Lagarde is not speaking or has stopped speaking, there could be an interesting situation here if the bulls are strong enough to break this level. And they're not. I kind of like this situation because I want to see really how strong the bears are here. At the moment they're pushing the bulls down, but they don't manage to move them beyond this level here. So in a way the bulls are still in control. Now we can think of doing some trading, or some prediction at least. We leave a little buffer. If the bulls will manage to break out, this is a good place to enter. If the bears will manage to repel this attack, this is probably a good place to enter and see if they can retest this level here. The bulls are a little bit tired here. They haven't managed to move the market up. I'm even more convinced now that there should be a short, because this was probably on the basis of something that Lagarde said. And usually when you have these big spikes like this, the market then goes back to where it started. So if they break this R1 here, probably at about this level or this level, I think that a short would be a good idea. Notice that we're still looking at lines of defense. For the bulls, for the bears, the line of defense, the first line of defense was this one here, this one here, and this one here. The only one that worked was this one here. So the bulls actually have managed to break already 2 of these levels, and they might be take a rest a bit now. And in fact, they break down, and now the bears have the possibility, if they're really serious, to retest this level here. The bulls don't react. The bears are becoming bolder, and sure enough, they go back down and test. This would have been around this area. This would have been my first target. Now, this is an important point. This is an important trench for the bulls. So are the bulls now trying to push the market back up? And in fact, there is a reaction there. And if you are bold enough, or maybe you can wait for another confirmation, but if you're bold enough, you can now try to have this long here and think that this area here is a big range. Started here, from here, it was retested here, and it was retested here, and there is quite a lot of evidence that now they might stay within this area for a while. Again, a little test of the bulls about the moving average to see if it still works. It looks as if still working. And now they have a very aggressive bar here. We know that R1 could be important. It wasn't before. I wouldn't wait too long. And if you are really buying the idea that this is a range, you should enter here. It's a less probable trade, a little bit more risky, but given these circumstances, would be a good call. It gets to R1 and it's stuck there. You see this doji. This is a very important sign that perhaps the bulls and the bears have now found a balance, an equilibrium, and you will need some momentum to move it one way or the other. Now the bears are probably retracing again. Let's see if the bulls will manage to reach this point here. Yeah, it looks like they are. But there you go. This would have been another target, and you can play this and see if the range will test. Will be tested again. Now, you would expect after this and this that the bears are pushing the market down. It doesn't look this way, and it looks as if the bulls are back in control, and they're actually using the R1 to push the market up again. It's another nudge, and I will probably start considering a long here if they break from this area here. Not quite. That's why you put a buffer above this area here. This could be a very, very important bar because it could be a classic reversal bar. If it's not a reversal bar, definitely you want to go long. Oh, there you go. It's not a reversal bar. You go long. You probably think that the bulls will test this R2 here. They don't. Interesting to see that the retrace reaches the breakout point. This is quite classic, actually. It reaches the breakout point and then it goes up again. This is good news for the longs because this bar has reacted to this area here. There used to be a resistance and now could act as a support, and in fact it goes up. So that's good, and that's another target achieved. I was on the phone on this one, so I didn't take this one, but I was okay because I already took this one, and this one here. What I would like to point out, I didn't trade after this, so I was busy doing other things, but what I would like to point out is you should really notice how these levels, these lines in the sand, continue to be quite important. You see, this is an R2, and again, as I said many times, this is just a stupid mathematical formula, but look how important people think, traders think it is. And look at this level here. There is a retracement, and I don't know what's going to happen here, but the bulls are reacting to this one. And then when the bears break this one, this level here, they break it quite forcefully. they go through the moving average, and then the moving average acts as resistance. Again, this is another testing of this area here. They are just hovering around R1 on this range, and you can start placing other areas like this one, for instance, could be quite important. And you see how it is important, actually. You see this one, how they break this with a lot of momentum. So that means that once they defeated the defenses here of the bears, the bulls are actually have a free rein to reach up to this point. Let's see if this point is respected. It is respected, and now they have another very big momentum. This would be another long. And again, you see another long, another retest of the breakout point, and then long again. But in this case, nothing happened, and it was already 230, which is the equivalent of 330, given the fact that the Americans have moved the hour forward. Then there is a retrace, and where do they stop? Again, on this area. So this is why I like to think of these areas as battle plan. This is the territory they are playing. The moving average is kind of a river. These are fortifications, and this is what I like to think, and I like to see some imagery to help the very boring activity of trading. I hope it helps. You know where to find me if you have any question. Bye.